Stock picks. We love them. We know you do as well. Let's talk some in the small cap space with Harry Watt, who's joining us from Shaw Partners and Market Matters. Harry, nice to talk to you on the small caps program, finally. Okay, so set the scene. Are these small caps that you like, that you love, that you'd avoid or hold?
Good afternoon, Nadine. Good to see your face again for the second time this week. Yeah, small caps. Yeah, it's been a tough place to put your money the last year or so. Really underperforming. Both here and in the US. Sort of unsurprising when markets get a little bit jittery. They sort of tend to the high-end quality names, big cap names. But a couple of picks today that we like, we own, and probably would add to. For different reasons, there's a couple you might add to in strength. There's a couple we're looking to add to into weakness as well if that continues across the three names today. But overall, three very different companies that we like and we do currently own.
Okay, so number one, what do you have, Harry?
So Global Lithium GL1. These guys are a lithium name. Obviously, it's in the name. They're looking at two assets in WA, two hard rock lithium assets. They own 100% of Marble Bar and they own about 80% of Mena. They came out earlier this week with a bit of an update on the processing that they're doing on their resource in Mena. And that's been really positive. So it's seen a 90% uplift in the lithium component of that ore coming through. And that's really positive for what that asset looks like down the line. These guys, they're probably, talking about an FY26 first production story. For Mena, they're probably looking more like the back end of this decade for Marble. So it is sort of a long-term view in terms of these assets. But if we're having a look at the lithium market at the moment, we've had a very strong pullback. The start of this year, we've started to see a little bit of a rebound in those lithium prices. I think that continues. The story we're hearing out of China is that there's been a lot of destocking for battery makers over there, and that's going to have to start to pick up again. So we're going to see that demand sort of side of the equation come through. Global Lithium have really good key assets in really good areas as well, and they've got some corporate interest and some corporate appeal in our opinion. So that's why we like it here and now. Bit of upside, really good leverage to that lithium play, plus that corporate back end that should see them supported. We know MinRes has about a 10% stake in the company, and they are looking to add to their lithium exposure. So it would make sense for them to pick up, the whole company or at least one asset out of Global Lithium. And that's sort of why we like it, and we like a lithium story near term, Nadine.
Yeah, okay, and it looks as if maybe there's a bit of value in there because these smaller lithium players have been so hot, but you can see in that yearly chart it's come off. All right, number two on the list. Are you looking to add any growth to the portfolio?
Obviously, Tech's been one of the standout performers year to date. So ReadyTech is one we own in the portfolio. It's sort of really missed out on much of this tech rally, but it's one we continue to like. It's one we started to add to the position. One we'll probably build on that position as well. If it continues to chop around here and we continue to see value in it. So just a bit of backstory there. The enterprise SaaS company, and they've also got some solutions for education as well. They're sort of competing with the technology ones of the world, but they've got a really good offering with a bunch of different scopes that they can apply to their customers. They had a cracking first half result. They had about 24 new customer wins that will see incremental revenue growth come through in the next 6 to 12 months. And they're starting to hit this sort of position in their business that they're getting scale coming through. So their revenue should continue to grow incrementally. Their EBITDA should outperform that. So we're sort of looking around that 30% EBITDA growth. And when they're trading on such a discount to their main competitor in T&E, I think that's a great opportunity. So they're trading on about mid-20s in terms of EBITDA to EV multiple. T&E is sort of around that 40 times mark. Technology One, they've got their own issues as well. So they've had a bit of a issue with their back end of the system. So maybe that plays into how well ReadyTech can perform from here, and if they can get a few more sales on board and then continue to incrementally grow that EBITDA side of things. Last year they came off the boil a bit. ReadyTech, they had a takeover play come through that fell through back end of the year. I still think that there's some value there, and I still think that some larger corporates or even some private equity sort of money should be looking at this stock again here. I think that there's a lot more value, a lot more growth coming through, and they're really starting to, that first half result was a cracker. They're really starting to prove up what this company can do longer term, and hence why we're happy to own it here and probably happy to add to that position heading into the next 6 months, Nadine.
Yeah, I find it so interesting, Harry, just a commonality between both those companies saying that there is the potential for M&A, and that just speaks to everything that we've been thinking and seeing in the small end of the market in Australia as of late. Last on the list is SRG Global. What is the investment thesis there?
So this company, we missed a lot of the rally in SRG, but we continue to like this stock. So they're an engineering contracting company that, they've got a lot of exposure to the resource space, but they've done really, really well this year. They're looking at, almost about to crack the $1 billion in total contract value wins this year alone. So that's a massive number that will add to their growth into next year. Their pipeline remains really solid. So SRG, they've got a very broad offering, but they've also got some really niche markets that gets them into key resource assets around the world. That gets them their foot in the door, and then from there they can incrementally grow their offering to their customers. And we've seen that through this year with their contract wins. It seems to be that they've got a contract win on site, and they've just continually to win new business with that same customer. So that's really important for SRG. I don't think the market's really pricing in what good of a year that they've had. The market's sort of peeled off the stock in the last few weeks in particular. And this is a stock that we're probably going to add to on the back foot here. Continue to grow exposure in the space. If you look at where it's trading on high single-digit PE. The peer group sort of trades on about a 10.5 to 11 times. So there's some incremental value uplift there just on a multiple basis. Plus, I don't think the market's fully pricing in what their earnings could be like this year and the pipeline that they've got into FY24 and their earnings from there. So I think that the market's a little bit behind on the numbers and one stock we own and continue to like.